webcast. This webcast will be recorded, and the link will be sent over by a local account executive together with a survey for this webcast. We would appreciate any responses as they do help guide the services and content we provide. If at any time during the webcast you have any questions, please feel free to write them in the message section. And if time allows, at the end of this presentation, we'll try our best to answer them. Again, my name is Victoria, and I'm the Associate Marketing Manager for Microsoft, located out of our Seattle office. Soon, I'll hand over this webcast to Neil Elcott, our Director and Senior Solutions Architect, who can speak about portfolio analysis within projects. This webcast series is facilitated and set up by Aaron Quinn, the brilliant mind behind all of our webcast series. So first, a little bit about Vibrant Fusion. I'm just going to go over this in lightning speed. So Vibrant Fusion is on the Project Advisory Council, and it's a red carpet Microsoft partner. They're one of the first to come up with built-on program for Project Office. As a Microsoft Gold partner, Vibrant Fusion has worked with Microsoft for 15 years and is a silver partner for content and collaboration on SharePoint. Vibrant Fusion has offices throughout the U.S. in New Jersey, North Carolina, with clients across the U.S., Canada, Australia, Sweden, Germany, and the U.K. Some of the major points that Vibrant Fusion focuses on is implementation, migration, and staffing. Recently, Vibrant Fusion was acquired by Microsoft. Microsoft is a joint venture with Microsoft, a 25% joint venture. And Microsoft's global presence and deep resource pool helps to have Vibrant Fusion working on a national and international standpoint. So this acquisition really helps boost what Vibrant Fusion is able to do and deliver services locally. Microsoft focuses on staffing, managed services, and Power BI. Within Power BI, they are a red carpet program member. So at this point, I'm going to turn it over to Neil Elcott, who can go into a bit more about Microsoft projects.
Great. All right, thanks, Victoria. Again, my name's Neil Elcott. I'm a Senior Solutions Architect here at Vibrant Fusion. And what I'm going to do today is take you through the portfolio analysis capabilities in Project Online. And there's a number of different areas within that module in Project Online and Project Server, and I'm going to try to break it down as much as I can and walk you through and give you demonstrations of each particular area. In particular, for those of you that currently use Project Server or Project Online, or could also be, maybe another scheduling or PPM tool. A lot of times when you're using a scheduling tool, it's more for tactical purposes. In other words, you're trying to track what's going on currently, who's working on what, what are some of the resources you may need in the near term? Are there any over allocations or scheduling conflicts that you want to get some visibility into and then overcome? But again, it's more from a tactical nature. The portfolio analysis module actually looks at things more from a strategic nature. So in other words, it's not just who's working on what are they working on, when will they be working on it. It's more of why are we working on a particular project, or why are we being asked to do certain things, and do we have enough dollars or do we have enough people in order to meet the requirements that are being asked of us from an organizational point of view. So some of the benefits of portfolio analysis, and you'll see this as I go through the demo, is you do get higher visibility into that strategic value. And by doing that, and you understand what the importance of a particular project is, the projects themselves will get more support, more backing, maybe more funding, more resources. It helps ensure that the funds are directed to the projects that are going to return the most value to the company. one of the things that you will tend to find with the portfolio analysis module here is as we have business drivers set up, you'll be able to figure out which projects better align to those business drivers, and frankly, they're the ones that should get funded. They're going to provide the most value to you and the organization. Another part of the portfolio analysis capability is to take a look at your resource pool, look at the projects that are being requested or currently being scheduled, and based on the priority of those projects, which projects should get those resources. And if we don't have enough resources, where is that shortfall coming from? And we'll get some visibility into that as well. So again, the overall benefit of portfolio analysis is it's giving you more of that strategic view of what's going on with your projects and with your resources versus the day-to-day tactical point of view of just trying to get the work done and trying to keep the projects on track. So when you look at it from the Microsoft Project Online or Project Server platform, in the past, years ago, it's probably like 5 or 6 years ago, it was actually a separate application. And what Microsoft did in the newer solutions is they streamlined it so that the information that you're prioritizing or the projects that you're prioritizing, the resources that you're looking at to see if you have enough staffing available is based on the same information that's going into your project schedules and your projects themselves. So again, you're not duplicating your data, you're not doing dual entry or anything like that. We're using the same projects, we're using the same resources, but we're looking at them from a more of a strategic and prioritized point of view. And that also means that your reporting can incorporate both schedule data along with the portfolio analysis data. Now, an overview of the process here is when you set up the portfolio analysis module and you start using it, the core component in this is what are called business drivers. So the business drivers need to be defined, they need to be set up within the tool, and then you have to prioritize the drivers themselves. You have to weight them. Once you do that, then the day-to-day process would be more of aligning those projects to those business drivers, and you do that through a survey component that I'll show you. You then prioritize the projects, rank them against each other based on how they align with those business drivers, and then you do some what-if modeling in the portfolio analysis module itself. And when we do the what-if modeling, it's both in terms of priorities, a cost analysis, and a resource analysis. So first thing I want to define are the business drivers themselves. So some notes from the field, as we've worked with customers over the years, business drivers are a funny animal because they're incredibly easy for us to set up in the system, but they're also very hard for customers to agree on what they should be and how should we measure those. So some companies that we've worked with, they've already had these defined. Sometimes they're in a business plan, sometimes in a prospectus, or they're using them maybe in an Excel spreadsheet in some way. But we can kind of take those business drivers and easily incorporate them into the system. On the other hand, we have other customers that don't have anything defined. And in a case like that, we'll spend time working with them to help define those business drivers, but it does take a lot of effort on the customer side to really understand, what are the key strategic objectives of the organization, how do we want to measure those, and how do we want to rank projects against them. And that's one of the key points. When you set up your business drivers, you do have to be very specific. You have to make sure they're measurable. If they're very subjective, they're going to lose the clarity, and people can argue whether or not the prioritization is correct. And as I mentioned earlier, they can be really difficult to define and gain consensus amongst your executive team. But from a setup in the tool perspective, they're actually very easy to set up and get moving. As far as the system itself, there is an area called the Business Driver Library. That's where we set these up. I'm going to show you that in a minute. Business drivers can apply to the overall organization or just to a single department or multiple departments. So if you have multiple groups or multiple departments using your same Project Server, Project Online environment, you can have drivers that only apply to, say, IT versus drivers that apply to finance. And based on that, we can create different prioritization models as well. So weighing the drivers against each other, there's actually two different methods that the system supports. The best practice is to use calculated, which means project online, project server will determine what the weighting should be, and we do that in a pairwise comparison, which I'll show you. Or you can also do manual prioritization, and it basically means that some organizations might have their own weighting model or maybe an Excel spreadsheet where they've been using certain weights for the past 5 to 10 years. We can still incorporate those kind of weightings as well and just set it up manually. All right, so let me go into my environment here. So what we're looking at right now is the home page of a Project Online environment running our quick PMO solution. And what I'm going to do here is I'm going to go over to this area on the quick launch bar called strategy, and this is where we find all the different components for the portfolio analysis. So the first area I want to take a look at is the driver library. And when I go into the driver library, you'll see a listing of all the different business drivers. These drivers can be in a status of either active or inactive, so if they don't apply over time, you can always go in and deactivate them. You can also see if it applies to a particular department, who created it, when was it created, and when was it last modified. So if I open one of these up, you'll notice that the settings for a business driver is really just text information. So we have the name of the business driver, we have the description, and again, you want to be as descriptive as possible, and you'll see why in a minute. This is going to show up on a survey for each project. If we want this particular business driver to only apply to certain departments, we can go into here, select which departments it's going to apply to. If we don't select any departments, then it means it applies to the overall organization, all the projects within the system. Finally, we have our status, active, inactive, and the real meat of a business driver is what we call the project impact statements, and that's what we see below here. So the project impact statements are basically how are we going to measure this particular business driver. And it comes with 5 different values. Now these are hard-coded. You're not going to be able to change what the value setting is, but you can change the description of each one of those values. So you have none, low, moderate, strong, and extreme. And each one of those has a point value. So none is 0, low is 1, moderate is 3, strong is 5, and extreme is 9. So based on how your project adheres to this business driver, it's basically awarded a certain number of points for that business driver. If you're extreme, that means you have very extreme alignment with that particular business driver. Your project's going to be awarded the most points. As I mentioned, this is simply text, right? So you want to be as descriptive as possible. You want to make it so that it's measurable, so that when someone is filling out their strategic impact assessment, they can easily pinpoint for their particular project, for this business driver, this is how my project impacts that driver. We'll see that in a minute. But you'll notice on all these, this one says does not grow revenue. This one grows revenue up to 500K. This one's 500K to $1 million, 1 million to 3 million, more than 3 million. So again, it's very measurable. Your project's going to land somewhere within that range, and you would select the appropriate level. So this is one business driver, and the whole idea with the business driver library is you can add as many business drivers as you want. Best practice is typically, don't have more than 10 business drivers. The more you add, the more complicated the scenarios will get. You want to keep it as simple as possible, but usually don't go above 10. So when I have the business driver library set up, from the project's point of view, how would you see these drivers presented back to you? So if I drill back into our project center, and I'm going to go down to a project. So let me go into this project. And when you open up a project, you'll have different web pages here. These are called project detail pages, and they have different purposes, but there's going to be one called strategic impact. And strategic impact is the assessment for this particular project, where we'll see each of the business drivers. So here we can see expanding into new markets and segments. We have our description when we set up the business driver. And then over here on the right-hand side, you have radio buttons where you can pick which impact statement applies for this particular business driver for your project. So this is where the measuring comes in. So if I'm working on this particular project, either I'm the PM, maybe I'm the BA, maybe I'm the project sponsor, but I want to fill out my assessment. If I want to figure out, well, for this particular business driver, it's expanding into new markets, it's measured by revenue growth. If my project is, say, $750K in growth, I would look at each of these values, see where $750K lies, and then I would pick the appropriate value. And I would go through all of my business drivers and do the same thing. So I would pick different values, and based on this, it's going to rank my project. When we get into the portfolio analysis module, it'll rank the project. It's not doing that yet. Now, again, if your project is related to a particular department, and that department has its own business drivers, they'll show up here as well. So if this is an IT project, I'll see all the corporate business drivers plus all the IT business drivers. In this case, I don't have any department-specific drivers. They're all corporate-wide, so that's all I'm seeing. So once I fill out this assessment, I go ahead and save that, and every PM for every project would be responsible for filling out the strategic impact assessment for their project. And that's going to be handled on a one-to-one basis, you know, project by project. Now, if I go back to the portfolio analysis module, the next area we have is the driver prioritization. And this is where we set up prioritization models for each scenario that you may want to look at. So for example, some of the scenarios might be based on a particular executive's point of view. So in other words, you could say this is how the CEO wants to manage the projects or prioritize the projects versus the CFO, or maybe it's for a particular department. This is how IT wants to prioritize their projects versus, say, finance. So if I go in and I open one of these up, and you can create as many of these prioritization models as you want. When I go in and I open this up, I can see that in the case of this particular model, the business driver increasing market share in existing markets has the highest priority, all the way down to improving employee satisfaction, which has the lowest priority. Now, how you set one of these up goes back to, do you want it to be in a calculated weighting, or do you want it to be a manual weighting? So I'm not going to create a full-blown model here, but if I go in and I create one on the fly, and I'm going to call this the August Webcast. If I want to limit it to just the drivers in a particular department, I can go here and pick whichever department. And then I have two options here. I can either do calculated, which is best practice, that's what's recommended. Basically let Microsoft's PPM solution calculate what the driver weighting should be. Or I could do manual, and then I can put the value in manually for each business driver. So below here, you can pick the business drivers. Now, this is one reason why we recommend don't get carried away and create a ton of business drivers. The more drivers you have, the more time it'll take for you to create this particular weighting model. Also, Microsoft supports up to 15 drivers in each weighting model. So if you do have more than that, you're only going to be able to use 15 anyway. In this case, just to demo this, I'm going to keep it pretty simple. I'm only going to pick 3 drivers, and I'm going to add them. When I go to the next step, what it's going to do is bring up a pairwise comparison. So I'm going to have this business driver versus these other 2 business drivers, and I'm going to say, is this driver more or less important than this other driver? So you would go through each driver comparison, select whether it's more or less important, and you have different degrees of importance. But as you go through and you select these, when I go to the next driver, it'll keep bringing up the comparisons until I've compared every driver against every other possible driver in my model. Hence why I only picked 3. If I had picked 10 drivers, we would probably be here for a couple hours going through this. But here I'm going to compare improving customer satisfaction versus improving employee satisfaction. So I can go in here and say this is much more important than that. And when I go to the last step, it's going to tell me what my calculated weighting should be. So here you can see what it came up with. Now you'll notice there's a warning here. So it does check your logic. So in other words, if you select something that doesn't quite make sense, you'll get a low consistency ratio score here, and below here it'll give you a description of why are you getting a low consistency ratio. And basically in this case, this should have been less important than. So now when I go back, notice I'm not getting any error. This is what our weightings are being calculated to be. And when I expand this, you can see we're scoring pretty high on our consistency ratio. Now, the other option you have is you can do a manual prioritization. So if I go into here, create another new one, pick manual. Again, go pick the drivers that you want to include. Go to the next step here. And then we can just manually type in what our weighting should be. So maybe I want this to be 50% and this one to be 25% and 25%. So again, this is useful if you do have a way. A lot of organizations, we tend to see Excel spreadsheets where they have certain financial formulas that they've been calculating over the years. They want to retain that. If you do have another way of calculating what the weighting would be, but you want to put the end result into Project Online or Project Server, this is how you would do that. And once you save it, you can then use it in your prioritization models. Okay, so let me jump back to my slide deck real quick. Once you have your business drivers set up, once you have your PMs or your BAs filling out that strategic impact assessment, and once you've weighted your drivers, at that point, you're really at the point where you can start doing some of the what-if modeling. And when we do that, we call them the portfolio analyses. And basically, every model is a collection of projects that you want to prioritize. You want to do maybe a cost analysis, and you also want to do a resource analysis. So when we do this, it's basically a 4-step process when we create one of these models. 3 of those are required, the 4th one's optional. So we need to prioritize the projects. That's where we rank the projects based on their driver weightings. We review those priorities, so we see what the end result is. We then do a cost analysis. And when we do the cost analysis, we can do different things like constrain our budget, force projects in, force projects out based on our budget, things like that. These 3 are required when you're doing your what-if analysis. The last step here is optional, and that's doing the resource analysis. So based on the projects that we have prioritized and we have the funding for, of those projects, do we have enough people to actually do the work? Okay, so there's basically 3 different data feeds that go into this. One is the business drivers themselves, so when you're filling out your strategic impact assessment, that'll be a big key part of this. Also, if you're doing the cost analysis, you want to use a cost field for that, so maybe a budget cost, proposal cost, some way that you're capturing the financial value of the organization. And then if you are going to do the resource analysis, you want to have some way of inputting the time-phased resource needs. Typically, that's coming from your project schedule. But you can also use a resource plan if you want to do high-level resource requirements. You can also set up project dependencies in the modeler, and there's 4 different types of dependencies. The whole idea with dependencies is if you have 2 projects in your model, 2 or more projects really, but one project, if it was canceled, the other projects cannot be completed. You want to be able to show those type of dependencies and relationships, and that's what this allows you to do. So you can set up these project dependencies. They could either be a straight-on dependency, you know, if project A is selected, B must also be selected. If project A is unselected, project B must also be unselected. You can do mutual inclusion. So as a group of projects, if one is selected, all of them must be selected. And conversely, you could do exclusions. And then finally, you also have finish to start dependencies, which are really more from the resource perspective. If you want to identify some different scheduling constraints, we can use that dependency to do that. So in other words, if the team that's completing project A is also the team that's needed for project B, we can put in that kind of a dependency. So let me go back to Project Online here. So what we're going to do is go into the portfolio analysis section. Now, most of our customers, this is an annual process. Some will do it on a quarterly basis. Even more rare, we'll see it maybe on a monthly basis, but usually we don't ever see it below that. This isn't a daily activity. This isn't even a weekly activity for most customers. But in here, you can create as many different portfolio models as you want. If you want to set up your project dependencies, that's up here on the ribbon. So you can see here we have one dependency set up, but if we wanted to set up more, we can go ahead and do that. And then you can create as many of these different models as you want, and each model can also have its own scenarios. So if I go into this particular model, I'll walk you through the entire process. So the first stage is where we define the model itself. So you give it a name, you can put in a description. If you want to filter the models, projects, and resources down to a particular department, you can select whichever department applies. Next, we have our prioritization type. So this is where we weighted the project, the drivers against each other. So there you can see the 2 prioritization models that I just created. You can also see the other ones that we already had set up. Or you could also prioritize using custom fields. So maybe you're doing a stack ranking where you have a ranking custom field and someone's putting in, you know, A projects, B projects, C projects. You could also use that as well. Again, it's not necessarily considered best practice, but you have that ability. Next, we select which projects do we want to include in the model. So here you can see all the projects that are already in this particular model. And then over here are the projects that are still up within the system that I could add if I wanted. Some things that we do with customers is we'll create different views for this particular component. In other words, you may want to see projects that are in a particular phase or a stage, or maybe they've already gone through a certain type of approval to separate ideas versus business cases, things like that. Next, we specify what's our primary cost constraint. So this will be used in the cost analysis. You can use any of your cost fields. A lot of organizations will have like a total budget, total cost, total benefits, and they'll use that for the cost analysis. In this case, we're going to use total cost. Now, the settings below here are optional. So if you don't want to do a resource analysis, or maybe you don't trust the schedules that you currently have within your system, you don't necessarily have to do the resource analysis component. If you do check this box, these settings below here will become active. And the 2 important ones are the planning horizon, which basically says for the resource analysis, what's the time frame that we want to analyze? We don't want to go all the way forever into the past, and we don't want to go forever into the future either. So we pick a particular time frame. A lot of our customers will do 12 to 18 months, but you can pick any time frame that you want. But again, best practice is usually stick to a smaller time frame. The longer time frame that you select, the longer it'll take to generate the analysis. In this case, we're going to go from January 2016 to January 2018, so a 2-year period. And then we also need to specify the resource role custom field, which basically will help us do our skill assessment. So how many people do we have of different skill sets? How many people do we have available to do the work that's being demanded by the projects in the model? And I'm not going to go through all these other settings, but when we go to the next step, we start getting into the prioritization of the projects themselves. So on this screen, what you see is a matrix where every row is a project in your model, and every column is a business driver that you have set up within the system. And then inside the matrix is the responses to the strategic impact assessment that the PM or the BA filled out for each project. So when you fill out that assessment, this is really where the value comes into play. So we can see for each project, how did the person filling out the assessment respond for each business driver. Now, for this is basically a chance for you to review what everybody has submitted. If someone did not submit a value, you'll see no rating as a value straight across the board. Or you may see people who are trying to game the system. So in other words, if someone says extreme, extreme, extreme for every one of their business drivers, they're going to get the #1 project. So this gives you a chance to review these. If you disagree with any of their values, you can go into here and change what their value was. Now keep in mind, it doesn't go back and change what they originally submitted. It only changes what the value is within this current portfolio analysis model. So you don't have to worry about changing something and have the integrity of what they originally entered changed. So once I agree to everything that I'm seeing here, I go to the next step. And what it's doing right now is it's calculating the priority of all of our projects in our model. So based on those values, this project is our #1 priority. And this is the value of that particular project. We call that the strategic value. And if I scroll all the way down to the bottom, we have our least important project. And you can see it's actually scoring with a very low weighting. So if you sum all this up, it's going to equal 100% value of your portfolio. And then each of these is the slice of that 100% of value for that particular project. Now note, I can't change this at this point or anything like that. I can't override it. That's what the calculated value is. If I go to the next step, which actually this is a good point, this is not real world at this point, right? So in other words, it's just ranking the projects from top priority to the lowest priority. It hasn't taken into account how much budget do you have to do these projects. It hasn't taken into account, do you have enough resources to do these projects? So when I go to the next step, we go into the cost analysis component. And with the cost analysis, what we see here is all the projects that I currently have in my model. If we were to do all of them, it's going to cost me $18.5 million. And with the cost analysis, there's a number of things we can do. But the most important one is we can constrain the funding for this group of projects. So if I go into here and say, you know what, my CFO said I'm not going to get $18.5 million, I'm only going to get $12 million, I can put $12 million in as a constraint, tell it to recalculate, and when I recalculate, if I scroll down here, you'll start to see projects that are showing up below the line. basically it's saying you shouldn't do these projects because you don't have enough funding in order to complete these projects. You're under your 12 million constraint. So you can see here we're very close to the 12 million. We're at $11.8 million. The reason for that is the tool itself will try to optimize the amount of dollars that it can spend. So if you tell it $12 million, it's going to try to get as close as possible to those $12 million, which means that if you go below here, you'll notice that there are projects that may have a higher priority, but they're not included in the model. So this one's a 3.9, but you can see we have a number of other projects that are less than that were included in the model. Now, based on that, what it's actually looking at is this budget for this particular project is also very expensive. It's $1 million. So part of that optimization is it's looking at that priority, it's looking at the cost, and it's saying, if I can free up the $1 million here, maybe I can get several other projects in that cost less than that, but the sum of those projects, so if you just take these two bottom projects, they're roughly $1 million, but their value summed up is over 5% versus 3.9%. So it's looking at that in order to get the most value based on that 12 million that you're going to spend. Now that said, you might look at this and you say, you know what, some of these projects we have to do. So one of the things that I can do here is save this as a scenario. So I can go into here and say it's a 12 million constraint. And what if some of these projects are compliance projects or regulatory projects that we have to do? So for example, the tax checker project. If this is a project that we have to do, I can force in or force out any of these projects. So if I force this project in and I tell it to recalculate, here you can see by forcing this project in, it's moved several projects around. So it actually bumped up this project, which is the same value as this one, so you could argue, you know, why did it do that? But then also it freed up the dollars by moving this project out as well. So I could save this. I could say 12 million with compliance and continue to go through all the different scenarios that we might be interested in. The CFO might come back to you and say, well, instead of 12 million, let's make it 8 million, or let's make it 16 million. So you can continue to go through and try different scenarios to see what happens. Now, as you're building out these different scenarios, if I click on the comparison dashboard, it'll bring up this dashboard where it'll show me all the different scenarios that I just ran. Out of each scenario, how many projects were selected. So you can see here, originally we were at 25 projects, and we ended up 17 in each of those different scenarios. What was our total strategic value? So that's the sum of the priority percent. So again, the higher the strategic value, the better. And then for what was the amount of dollars that we spent? So the trick here is you want to be able to get the highest strategic value for the lowest cost. And that's what you're seeing here on this efficient frontier. And as we go through and we create other scenarios, you'll see how they plot out. So again, the highest value we're able to achieve with the lowest amount of money that we're spending. But this is a good example here where at 100% we were spending 18.5 million. We only dropped about, what, 18%, but we actually almost, cut the budget in half. So you do that kind of comparison to figure out how you're getting the most bang for your buck. Now below here, it will show you also for every project, what happened to that project in each scenario. So what was its priority? Was it included? Was it not included? Was it forced in? Was it forced out? What quite a few of our customers will do is you'll actually find out from your executives what are the different scenarios that you're interested in. You would then run the different scenarios for them and then report back to them either using this dashboard, or you can export out to Excel. And if you want to create your own report on the same information, you're able to do that. Now, once you settle in on a particular group of projects, so we started out with 25 projects. We're now down to 17 projects. If I'm doing a resource analysis, when I go to the next step, these 17 projects will be carried forward. The other projects that are unselected below here, they're going to get dropped from my model. So when I go to the next step here, so when we go to the next step, now we're doing a resource analysis. So we basically have settled on, we're going to have $12 million in funding. We're going to do these 17 projects. Out of those 17 projects, looking at what our resource needs are. So again, the resource requirements are going to come from your schedule or your resource plan. It's going to compare that against the resource pool to see how many people do you have and how many are you short. So here it's basically saying these are the projects that we have enough resources for. These are the projects, these 4 projects, that we can't currently do because we don't have enough resources to do those projects. Now, if I want to figure out exactly what's going on here, if I switch over to this requirements details view, the requirements details view will show me where those resource constraints are happening, both in terms of time, what months or what quarters are we having those constraints, and then also based on skill set. So here at the top, we're going to see overall resource availability. So we'll see every role that we have set up in our resource pool. And then in the table, we'll see how many FTEs do we have every month available to do work for that particular role or skill set. Now you'll notice it is highlighting the months where we're running into resource constraints. So below here, if I collapse all the selected projects, because they're the projects that we know we have enough resources for, what I'm really interested in are the projects that we don't have enough resources for. So when I take a look at this, I can see all the different roles that that particular project needs. What's the demand? So you'll see how many FTEs are needed. And wherever you see the cell shaded, basically means you're running a resource constraint during that particular time period. And there's a couple different things we can do as we start to analyze this. One is, if you go back to the Gantt chart view, sometimes you may be able to get a project pushed in by simply moving the original and new start date. So for some of the ones that don't have a value here, that means that project has already started. It started before your model. So in other words, if I pick January 2016, you can see these ones have already started. So I can't shift the start date of that one. But for these other ones, I can move it. So if I shift this start date out a couple months, tell it to recalculate, by simply moving the project around, I might be able to get it moved in, and I was able to get this one moved in. And you can do the same with the projects that are selected. You could either start them sooner, start them later, and by mixing up the start date, you may be able to get a better utilization out of your resources. If that doesn't quite do the trick, another option is if you expand the metrics view here by clicking on Hide Metrics, there's this higher resources option. And what this allows me to do is to go in and I could say, well, what if I were to add 2 more people? What if I were to add 4 more people? By adding headcount, how will that impact the selection of projects that I have? So if I go into here and I say I'm going to hire 2 more people, notice I'm not saying exactly what type of people I'm going to hire. I'm not saying I'm going to hire a developer. I'm not hiring an engineer, a project manager. I'm just saying, what if I were to add 2 more people? what would I need? So if I recalculate this, based on adding just 2 more people, I'm actually able to get all 17 projects into the mix and scheduled to be completed. Now, as I said, I didn't say what type of resource I'm going to hire. I only said 2. And the reason I brought that up is one nice thing about this is it analyzes the resource requirements for these 3 projects. It determines what resource is needed. Maybe it's a tester, maybe it's a project manager, maybe it's a developer. And it comes back and it'll tell you, if I run my hired resources report, that based on adding 2 more headcount, you should add a trainer, and they would be working on this particular project. And you also, we have a vendor role here, and they should be working on this catalog publishing project. And it'll tell you when do you need them to start by, when would they be finished. And based on the hourly rate that you would typically pay for that kind of resource, this is what the cost will end up being. So we need 4,248 hours on this particular project for a trainer, and this is what your total cost will be. So just like we did in the cost analysis, you can run different scenarios with this by forcing projects in, forcing them out, adding resources, removing resources to come up with the right mix, and then you can play that scenario back to your executive team. So I'll open it up to any questions at this point. If you can type it into the chat window. We don't have any questions yet. I left everybody speechless. I'm going to try unmuting. Hopefully it's not going to be too noisy, but let's see. Actually, for some reason, it's not letting me unmute. Oh, there we go. Right.
Not if we can avoid it, yeah.
Anybody have any questions?
Thank everyone for joining us for this webcast. For local account executives, you can reach out with an email containing a link to the survey as well as a webcast recording. Would appreciate your responses.
If somebody's speaking, it's very difficult to hear them.
All right, is that better?
Much better.
Okay, thank you everyone for joining us. I'm just going to re-give that information just really quickly. So again, your local account executive is going to reach out with an email containing a link to the survey as well as a link to this webcast recording. We'd appreciate your responses as they do help generate the content we provide. Please feel free to connect with Vibrant Fusion and Wickersoft via our LinkedIn, Facebook, and Twitter pages to learn more about the solutions we offer to help drive your business. Our next In the Trenches webcast series will be on August 30th at 12 o'clock Eastern, and will focus on resource management and how to maintain a balanced team. Again, thank you, Neil, and thank you for everyone for being a part in this webcast, and we hope to see you at our next event. Thank you very much.